Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. It is a new week, but old narratives continue to drive the markets. US exceptionalism is an ongoing narrative, stronger growth and a more stubborn inflation compared to the other side of the Atlantic, which includes UK and EU. Both these economies have shown weak growth and inflation falling below target central bank levels. This has resulted in markets pricing more cuts by ECB and BOE than previously being anticipated. In Asia, China and its stimulus has been driving investor expectations. More recently, there has been some cuts in the loan prime rates. On the geopolitical front, while there has been no escalation, it seems every weekend markets anticipate some sort of escalations. Good morning, JK. I think this week is relatively light except for a few PMI numbers. What are your thoughts on the key things that will drive the markets?
Good morning, Swaraj. Yes, markets are looking beyond the near-term numbers. So you have narratives developing in various economies, different narratives, in fact. Eurozone, of course, not just the inflation, but also the growth picture is really prompting the monetary policy expectations. In fact, some of the governors of the European Central Bank have reportedly asked for the statement to be changed, which normally said that keeping borrowing costs sufficiently restrictive for as long as necessary. They wanted to drop that statement. Apart from that, markets are also now pricing in a 25% chance of a 50 basis point cut in Europe. And this is driven by the fact that not only have their inflation fallen below the target, but also the growth picture has been poor. In fact, Europe actually cut their GDP forecast by 0.1% for this year. It's not certain. I am not in that camp, but yes, this is something that is evolving that can keep the euro gains capped. On China, we had the announcement, of course, somewhat expected about the fresh cut of 0.25% in their loan prime rate for 5 years as well as 1 year. And also, China has continued to do something just to keep the stimulus package on. So they kicked off two funding schemes on Friday that will pump in as much as $112.8 billion into the stock market through newly created monetary policy tools. Again, Chinese markets have not reacted much because that was somewhat expected. Possibly market expecting something more concrete on the real estate sector. So that is the narrative in China. You have huge stimulus that has been initiated, but market still looking for more, particularly for the real estate sector. On US, the GDP forecast by the NY Fed and the Atlanta Fed, they have all been pointing to growth of more than 3%. So this actually does not gel with what the Fed has been looking at as economy more now, growth more important than inflation. So there is actually no concern as far as growth is concerned if you go by the numbers and also the projections that is coming about. If you look at UK, data has been good. Unemployment data was very good, and then it is followed by a retail sales number also quite good. Of course, it's influenced somewhat by people expecting tax increases in the coming budget, but as of now, UK looks in a good position, and I don't think you expect hefty rate cuts from UK. And finally, on India, the big narrative that's happening as far as the market is concerned is the big outflows from FIIs. Right from September 30 till now, we have outflow of more than $11 billion and one of the largest outflows. It has in fact erased all of the flows that came in now in September earlier to 30th. So that has influenced the exchange rate to some extent, not much, of course, because it's still well governed by RBI. Definitely, the stock markets have underperformed in India in the last 1 month, about 5% down. US markets are still at all-time highs. So, different narratives are guiding. But then I think going forward from now till the next fortnight, markets will be preparing for the super week of November, the first week of November, where we have the Fed meeting, we have the non-farm payroll data, and the all-important November 5 elections. So I think markets cannot take a firm view either side when we have such big events lined up. And just before that, we'll also have Bank of Japan rate decision on October 31. So I think all reasons to think that markets will hold on to their current positions to some extent, maybe some adjustments, uh, unlikely to move either way big. But definitely, I think people who are positioned on the extremes will be going in for options. So I think the option prices can move up in various sectors. That's how I'm looking at. On the overall dollar, I think 387 was very strong resistance, which was hinting at, and that may hold maybe 104. On the downside, I don't think it will go below 102 also. So that range should hold. And for the rupee, I think if you see further larger outflows, 8410 10 can be allowed to break. Market also looking at the fact that RBI's reserves have come down by a hefty 12 to 14 billion from the peak, and might have been driven by more selling by RBI apart from the valuations. If there are larger outflows, I won't be surprised 8410 will be broken, but that is not going to create any panic because it will be a very orderly move driven by the flows only. So looking forward to a quieter period for the markets, waiting for eruption of big volatility later in November. Thank you.
Thank you, JK. And just quickly summarizing, in Eurozone, markets have started pricing a 50 basis point cut in December, meeting as the growth struggles and inflation falls. China cut its loan prime rate by 25 basis points for its 1 year and 5 year rates. US GDP projections by the New York Fed and the Atlanta Fed shows more than 3% growth, so that's a very positive number. While even in the UK, we have been seeing good retail sales as well as falling inflation, which is a very positive situation for the economy, because unlike in the Eurozone, the growth does not seem to be as of a big concern in the UK. And India, we are seeing some strong FII outflows. It has wiped out all inflows that had come in September, in before September, sorry. And if the outflows continue, maybe even 8410, we might see 8410 break on the higher side. And in fact, even RBI reserves have come down by almost $10 billion. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.